Michael also, frames it as the iPhone moment for strategy. The one killer product built on top of Bitcoin is Stretch, because so many people have done so much with Bitcoin over the last 10 to 15 years, and a lot of it is extremely useful and extremely valuable and has pushed the industry forward. But our view is that the killer product using Bitcoin is something that's dollar denominated, because the entire world runs in dollars. The unit of account is dollars. Everything is pegged in dollars. So it has to be dollar denominated, and it has to be something that's stable, that is stripping away this volatility of Bitcoin that creates so much fear and anxiety for so many people. So it has to be stable, and it has to offer some yield on that product.
CJ, it is great to have you on the podcast. We've been planning this for a few months now, trying to get diaries to work. So it's amazing to have you on the show. Welcome.
Thank you so much for having me, Jordan. And I apologize for not being able to, make this work earlier. We've gone back and forth many times, and I think few times it's been at my end, maybe just once or twice at yours. But I'm glad we've finally made this work, and excited to have this chat with you.
Yeah, likewise. It's we're both in very busy businesses. You more so than me, probably. And I'm excited to hear more about what life is like inside strategy, your role, and then getting into the different preferred equities and going through all of them and hopefully explaining them so people can fully understand what's going on. Let's get into it. You're part of the Bitcoin team at Strategy. So what is your role, and what does this involve day to day for you?
Yeah, it's a small Bitcoin team. There's about 10 to 15 people in total. 5 of them in the finance team. I'm one of them. Another 5 people in the legal team who we work with very closely. Then obviously our management team, Michael, Fong, and Andrew. And then few more people across functions such as accounting, tax, SEC reporting, really important critical functions. So all in all, it's a very small team of 15 people. And as I mentioned, I'm part of the finance team. And I get this question often, what does my day to day look like? And I unfortunately never have a good answer, because every day looks so different, and every month and every quarter looks so different. But I've been here for 2 years now, and I basically work across all the critical sort of Bitcoin activities that we do, right from capital markets, which is, launching these preferred instruments, conducting IPOs, to investor relations, which is speaking with investors in the common equity, investors in the credit instruments, old investors, new investors, retail investors as well, running our investor presentations and earnings calls, to Bitcoin treasury management, actually, buying the Bitcoin, custodying the Bitcoin, tracking the Bitcoin, a lot of advocacy, which earlier we were, a lot more focused on getting a lot of corporations to adopt Bitcoin. We, fought that battle for many, many years, had a decent success, but not tremendous success. But a lot of corporations now do have Bitcoin on their balance sheet. And I think the last thing I'd mention, which is the most exciting perhaps, is I get to work with Michael fairly closely. I help him out with a lot of his presentations, a lot of the modeling exercises he likes doing, which is partly internal to actually, track what we're doing and how we're doing it and what we're projecting for the future. But then also a lot of intricate modeling work that we do when we are conceptualizing a lot of the theory behind these digital credit instruments and are trying to explain to investors what the risk is, what the probability of outcomes might be. So that's really enjoyable, being on the road with Michael, meeting investors, and then working on some of his presentations and models and speaking with him every now and then.
Yeah, because there must be a lot of work that gets put in the background. I'm just thinking around Michael's. I'm so used to saying Saylors. I'm used to saying a second name first. Michael's like presentations, thinking about how to communicate the message because he's put, I imagine, you and the whole team and him have put a lot of thought into the message that actually comes out externally. So it's well received, whatever you are releasing. So yeah, there must be a lot of work that actually gets put into all these presentations.
Yeah, it's a lot. And at times, that's what leads to long days and long hours, which I don't mind. I personally love working on Bitcoin and strategy. So I can do it, all day, all night, over the weekends as well. But it is a lot of work. And a lot of it is, it's both ends of the sort of complexity spectrum. Sometimes we are doing really intricate, complex modeling work, coming up with, probabilistic distributions of what Bitcoin's price might be few years out. What does that mean for the risk on our credit instruments being under collateralized by Bitcoin? So, that's more complex financial modeling and theory. But then there's also on the other end of the spectrum, trying to simplify a lot of concepts and trying to simplify the message and break down the actual key points to just few words. And get that into our presentations, get that into our social media handles. I have the privilege of sometimes, or all the time perhaps, running our Twitter handle as well, at Strategy. So if you don't like the content or if you like some more fresh content, I'm the guy you can complain to. Please let me know. But that's the kind of work. It's a lot of work, and it's both ends of the complexity spectrum.
Yeah, it's it is distilling like even like taking away strategy for a second, like even distilling Bitcoin and articulating Bitcoin into a couple simple sentences for people to understand is very difficult for a lot of people to do, and to be able, it's such a talent to be able to distill such complexity down into something that's digestible for someone to actually understand. Um,
And I wouldn't take too much credit for that. I would say a lot of that is Michael and Fong themselves. I think for a lot of us, for me personally, getting into Bitcoin was a big part of it was because of the way Michael was able to distill some of those concepts that appealed to someone coming from the world of traditional finance and investing. And I think that's the beauty of Bitcoin, that so many people can approach it from different angles and then simplify the message for that kind of audience. And that leads to a new wave of adoption. So I think Michael's already done a tremendous job over the last 5, maybe 6 years now on just simplifying that Bitcoin message. Bitcoin is digital capital, Bitcoin is digital property, and getting that across to so many new people who have now become, Bitcoin maxis.
if you're by working with because I always think about this, and you probably get asked this all the time, so I'm so sorry. But by working with Michael so closely, like what are some of the things like that you've learned from him by being just around him because he's such a pioneer in the space.
Yeah, there are lots of things. It's hard to single out a few, but I'll give it a shot. I think when I first met him a couple of years ago, when I joined Strategy, I was really inspired by just the amount of detail orientation he has and how deep he can go into the details and actually uh, not abstract it to unnecessary layers and assume, an outcome or a conclusion. So just being really, really detail driven, and getting into the weeds of every single thing. And second, I remember very vividly, and he has done this throughout the last 2 years, is just the amount of brainstorming he does using AI and how deep he goes in his thinking using AI tools, which I would imagine a lot of us already do. And I used to do a lot of it already before I joined Strategy and before I ever met him. But just the amount of back and forth one can have with AI and the amount of research one can do very quickly and the amount of depth one can get is watching Michael do it is pretty, inspiring. And then I aspire to do something similar, and I go deeper. And you can basically do like 100 hours of research with one good prompt or one deep research run on ChatGPT. So that's pretty cool. And then I would say the third thing is just the clarity in the messaging. And he always pushes me to simplify the message, to make it clearer, and focus a lot on the signal to noise ratio. And on any slide, on any message, on any deck, there can be a lot of noise that is introduced unnecessarily. And how you want to always clean that out and focus just on the signal and have the right structure in place. So just this concept of, maximizing signal to noise and always finding the right structure for a message. I think that's pretty inspiring as well. And then I think just creativity. He is, extremely creative. A lot of these financial instruments, a lot of the credit instruments, as he himself says, it's creativity and AI, and they would not be possible without AI. And which is very true. It literally was Michael running a lot of deep research queries on ChatGPT and trying to figure out what can be improved from the previous credit securities to get to something better that investors want based on the inputs he was actually hearing in real life from investors, from his friends. And then with the constraints of what the capital markets allow and what the law allows, which is something that ChatGPT is great with, right? Because then it just has all the knowledge. And then you insert the creative ask that you want and get to the output you want. Like all of that is just, it's beautiful to watch Michael and his AI queries.
It's yeah, it's funny to think because like a lot of business chairmans or CEOs or business owners like are a lot are scared to embrace AI and use it and feel like it's. I think for a while, a lot have felt like it's cheating, but now it feels like okay, well, you have to embrace it and you have to ride that wave, and really get behind it and use it. Cause it's funny. So I was on a flight this morning at 6 a.m. With my brother, and we were both working, and obviously we had no internet. And he said to me after, he was like, "Well, I thought about doing this thing, and it would have taken me about 45 minutes, or I just waited until we landed, and I just used AI to help me structure the whole thing." Um, and it's just funny now how like productivity is just skyrocketing. And I had Jeff Booth on the podcast that just went out, and we talked about AI and Bitcoin in your business, and how important it is to have these two things. And that seems to be what strategy is all about.
Yeah, that's exactly right. And we are a software business originally. We have, almost 1,000 software engineers. So there is a big culture internally at strategy already from the legacy software business that promotes the use of more technology, that embraces new innovations. So just generally outside of what I'm discussing with Michael, there is like this new culture at strategy of using a lot of AI tools to enhance productivity. And we're always sort of experimenting with the next best tool out there to enhance what we are able to do it faster, to do it better, to do it more accurately. And I think that's necessary, as you're saying, for every other business out there. And it's just about, I think, one is when you're trying to think and you want to think deeper, think faster, you can use AI. And the second is to actually do tasks that you would do on your, let's say, laptop or computer. Just manipulation of information on your screen could be an Excel model, could be PowerPoint, but as long as it's in my framing, like you're manipulating information on a screen or on software, like that can just be done 100x better with AI. And maybe in the physical world, we're not there with robotics yet. And maybe who knows, humanoid robots might be a big thing few years from now. But right now, everything that's software, everything that's virtual, all of that can just be done 1,000x faster with different AI tools. And it's just going to get 1,000x better month on month, year on year. So I think we're living in an incredible era because we're going to see real disruption in how we actually do work. So it's pretty cool to see.
Yeah, I'm in the same boat. I know a lot of people are scared, but I find it exciting. It's a with strategy. I'm just interested in someone internally observing like how have you seen that the company has changed? Because you said there's what 10 to 15 people working on the Bitcoin side of things, but you're traditionally a software company. Um, so how's the importance changed? Um, within internally within the company, compared or looking at the Bitcoin side of things and then the operating side of things, or is it kind of like mashing together?
It is a bit of mashing together. And I would say that started only a couple of years ago when the Bitcoin side of the business became more than 50% of the overall value of the business. Up until then, it was maybe just less than 50-50, or maybe it was already greater than 50 at the point. But there were kind of silos where the software business and the software side of things was doing its own thing and was asked not to be distracted by Bitcoin and tell customers that they're not distracted by Bitcoin. And, it was not necessarily one mission. And then something changed 2 years ago when Fong and the management team realized that, it's really one mission. And the Bitcoin side is only strengthening the software side and, removing other threats that might otherwise exist for the software side, making them have a lower time preference, build products for the future, and things of that sort. So it's sort of meshing in together a bit more. But I would still say that there are 1,000 to 1,500 people on the software side. Their day-to-day job is to run the software business, to build business intelligence tools for their enterprise customers that have been customers for like 30 years now, a lot of them. And they are all inspired by the Bitcoin side and they understand Bitcoin deeply and they are able to sort of find ways of getting synergies out of the two businesses together. But they still focus on the software and they still prioritize it. And it's still an essential part of what we do. What's only changed is that from an external perspective, for investors investing in the business today, the software side has become a small fraction of the overall value. So then they don't tend to view it with a lot of materiality when they assess what will happen to the business a year from now or 5 years from now. And then the Bitcoin side becomes, 99% of what the answer is. So internally, there's still a big focus, and a set of management team members are just solely dedicated to software. But externally, it's not the same.
Yeah, that makes total sense. Okay, let's move on to the preferred equities. This is what I really want to dig into today. And if you could, so what I'm going to bring up is an image, and I want you to tell me, or a graphic, and this really made it click for me. But I want to hear from you if you think like this is a good way of laying out what you are doing at strategy. So the image, if you can see this
Yeah.
here. So this is where it took me a while to understand exactly what you were doing here. And this graphic really helped me. What's your thoughts on this? And could you just explain it a little bit, going into each one, and then we'll dive down deeper into the stretch one.
Sure. I think it's a great graphic, firstly. Jesse Meyers has created it, and he's written some fantastic pieces on Bitcoin over the years and created some incredible graphics that have really helped simplify many complex topics.
Agreed.
So kudos to him. And I think this graphic does a good job in explaining what the business model of strategy is. And if you look at all the wealth in the world, which this chart shows, $1 quadrillion worth across all of these different asset classes, the question you have to ask yourself is, as Bitcoin continues to grow as an asset class and goes from being $1 trillion or $100 billion earlier to a trillion to now 2 trillion to, 10, 20, 50, $100 trillion, will capital directly flow into the commodity? And will people, sell their bonds, sell their equities, sell money instruments and buy Bitcoin directly? Or will they not? And perhaps there's a reasonable case where they cannot do it because they don't have the flexibility of doing it. They only have access to equities or bonds or money instruments, and maybe they manage different funds and they have mandates to only invest in these securities and they can't go to the underlying commodity directly, or they just don't want to. They just don't have the understanding or technical expertise to be able to buy Bitcoin directly, or they don't want to take the risk. They trust the traditional system and the way capital markets have evolved over many, many years a lot more. So then they will seek exposure to Bitcoin through another instrument on top of Bitcoin that matches the mandate or desire that they have. So if there is an equity instrument that's backed by Bitcoin, or if there's a credit instrument, a bond or a money market fund like instrument that's backed by Bitcoin, then that becomes a lot more appealing to a lot more people because of these different reasons that we discussed. So that's effectively what strategy is doing. We are taking Bitcoin, we are securitizing it in a way. We are issuing different traditional financial instruments that are backed by Bitcoin and that are giving you different risk reward exposure to Bitcoin. And we're bringing that capital all into the Bitcoin ecosystem, which then helps Bitcoin, the asset class, actually grow while people are continuing to be exposed to the asset classes that they like, but they're just getting sort of Bitcoinized in some sense. So yeah, I'll take a pause there, but that's the way I like to think of this chart and describe what it says, what it means.
Yeah, that's such a good way of putting it. I'm sure you've done it many, many times. And yeah, it just kudos to Jesse for. I think just what we were talking about earlier is just simplifying things. I'm not very technical, so I need something like that to start to understand something to then take me down the rabbit hole and get interested in something. Um, so yeah, it was very interesting, and that graphic, even without all of the preferred equities on it, like that really is just a good picture to look at Bitcoin as a whole and like how small Bitcoin is compared to global assets, which is it just reaffirms how early we are, I guess.
Yeah, that's exactly right. I would say on the graphic though, where you see some of our preferreds tapping different sort of buckets or pools, and you see that bond asset class being a lot bigger than the money asset class. There's a case to be made, even if you ignore Bitcoin for a second, that the reason the bonds are such a bigger asset class compared to just the money is because if you're just looking for money market funds or money like instruments, you're practically getting no yield and you're falling behind compared to inflation. So you're forced to reach for yield and invest in these bonds that are longer duration in nature, that offer you higher return so that you can outpace inflation. But if you had an alternative of just holding your money and outpacing inflation, then that asset class might have not, expanded to such a big size. So yes, Stretch, was targeting that money like segment, but you can argue a large part of the bond like segment or that asset class would also find Stretch extremely attractive because now they no longer need to reach for yield and find those long dated bonds issued by different corporates that are risky based on future cash flows because they want to outplace inflation. They can just buy this short dated instrument that's more money like. It's not exactly money and it won't be ever money, the instrument created, but it can solve for that problem.
Ah, okay. Yeah, I've never thought about that.
So,
That's
so the market size for Stretch is as big as the others, if not bigger. Uh, the other preferreds, I mean.
yeah. Yeah, I've not thought about that. And it would, yeah, move people back into money market. Okay. Right, let's dive into that then. Let's dive into would you be able to do like an overview or dive into Stretch, what it is and how it works as well would be great because I know a lot of people, one, don't know about it from what I'm seeing in the UK. Because yeah, when I bring it up, a lot of people, mostly obviously like on the edge of Bitcoin. Most people within Bitcoin have heard about it, but also a lot of people don't know like how it all works. So I think it'd be really good just to like break that down today.
Sure. And as we discussed, simplicity is key. So I'll start with a simple explanation and then let's dive deeper into the more complex, nuanced topics on how it works. So it's a digital credit instrument that's issued by Strategy, the company, that is designed to be stable in price at the $100 par value with just small fluctuations around 100, if at all. and pays out monthly cash dividends to anyone who's invested in it. And these monthly cash dividends sum up to 11.5% over the course of the year. So the performance or the return of this instrument is 11.5%. But the key difference is that it's not volatile in nature. It's designed to be stable at 100. So it strips out all that volatility that comes with different kinds of instruments, including the underlying Bitcoin and equities or credit instruments that typically investors don't understand, can't comprehend what makes the price go up or down. You just want something that's stable, that's giving you cash income. And that's what Stretch is designed to do. And it's backed by 5x, roughly 5x more Bitcoin on Strategy's balance sheet. And we also hold about 2.5 years worth of dividends that we need to pay out in the form of cash on our balance sheet. It's already there, ready to be paid out over 2 to 3 years. And then a unique advantage of Stretch, in addition to the fact that the yield is so high, 11.5%, and that it's stable in price, is that the cash dividends that we pay out every month are all tax deferred. You don't pay tax as in when you receive those dividends. You only pay tax when you sell the instrument at a future date. And then you pay long-term capital gains tax on all the dividends that you collected. Or if you've received dividends that add up to your original investment, then technically your cost basis in that investment has been decreasing each time you receive a dividend, has gone all the way to zero. And now you pay taxes as you go, as you receive every incremental dividend. But if in theory you're holding this instrument for a long period of time, for the first 9 to 10 years, you would not pay any taxes. You would just pick up all the dividends, the entire 11.5%, not pay ordinary income tax, not pay capital gains tax. You would just be deferring the capital gains tax into the future. So I'll take a pause there, but the key highlights are, 11.5% cash dividends, annualized return is 11.5%, stable in price at $100, and tax deferred nature of dividends. And it's listed on NASDAQ, so it trades with a very high volume on NASDAQ. You can go on pretty much any brokerage account and buy it and sell it like you would any other stock.
And then could you go into how this then helps Strategy acquire more Bitcoin? Because I find that very fascinating how that all works.
So Strategy is a Bitcoin company. We are Bitcoin maxis. We believe Bitcoin is appreciating at a much higher rate than traditional asset classes into the future. So let's say our base case is that Bitcoin is appreciating 30% for the next 10 years on average per year. If we issue, let's say, $100 million of Stretch today at $100, we take that $100 million of cash we received in exchange for selling that stock or selling the credit, selling Stretch, and we immediately go and buy $100 million of Bitcoin with it. And as long as Bitcoin is appreciating more than the 11% return that we are offering to Stretch investors, we get to keep all that upside on the Bitcoin that we bought. So we're technically just capturing that spread between the return we give to Stretch investors and the appreciation in the price of Bitcoin. So that's one way of looking at it. And the other way of looking at it is if you are focused on the Bitcoin per share metric, BPS, that we are focused on growing year on year and generating BTC yield, which is that increase in Bitcoin per share, the exposure you get as a common equity shareholder holding MSTR to Bitcoin, that goes up each time you issue Stretch and buy Bitcoin with it. Because you're not increasing the dilution in the common equity shares. MSTR shares are not going up. What's going up is the Bitcoin. And over the course of the next 1 year, 5 years, 10 years, you'll have to pay dividends on Stretch. So you could, in theory, either sell small slices of Bitcoin or issue new MSTR shares then in the future when you need to pay the dividends. So that's how the whole system works. And the Bitcoin per share goes up. And we capture the spread between Stretch return and Bitcoin return. And MSTR, the common equity, outperforms Bitcoin. So that is the key message here. The only reason we're doing any of this and the reason it works is because it helps MSTR, the common equity, outperform Bitcoin using leverage. The same way you might take a mortgage on your house and the house appreciates in value a lot more than your mortgage that costs you 3%, 5%, 7%. And then the equity in your house is actually going up a lot more in percentage terms relative to how much the house is appreciating in value. You're doing sort of a leveraged buyout of Bitcoin in this case and outperforming Bitcoin using stretch as that source of leverage or amplification.
That's a good way of putting it. That,
Yeah.
yeah, I
I
like
hope we
that a
stayed
lot.
simple enough and you tracked what I was saying and I didn't get too into the weeds of it, but I'm happy to, simplify some of it further.
Um, I know there'll be a few people in the UK thinking, but the value of my house isn't actually going up at the moment. But that's such a good way of framing it. Then how do you decide, or how is it decided, um, the percentage? Because it has been going up for stretch. The percentage has been going up. I can't remember where it started. Um, but yeah, can you
90%.
Oh wow. I was going to say 10, but okay. Yeah, how's that decided?
Sure. So the way we've operated is that we get to change the dividend rate at the end of each month, and that decides the dividend rate for the next month. And there is no limit on how much we can increase the dividend rate by in a given month, but we can only decrease it by 0.25% or 25 bips. And if there is any decrease in the Fed rate, if the Fed is cutting rates as well, then we can also cut by that amount. But the key point is you can change the rate at the end of each month. There's no limit on how much you can increase it by. So then the question becomes, when do you want to increase the rate? So we came up with a framework that said for the last 5 days in a month, we will look at the average price of stretch. And if that's below 99, which is kind of the target band that we want, 99 to 100 or 99 to 101, if it's below 99, the average price in the last few days of the month, then we increase the rate. And we increase it by 0.25% if it's between 95 to 99. And we increase it by 0.5% if it's between 90 to 95. And what this does is it increases the rate, more demand comes into it because now it's more attractive and that pushes the price back up. So it's a way of kind of stabilizing the price or bringing it back to the target range that we have. And what we did is last month, we said that we will update our framework. And instead of just looking at the last 5 days, we'll just look at the average price for the entire month. So for the entire month, the average price is above 99, then we won't change the rate. If it's between 95 to 99, 0.25%, between 90 to 95, 0.5%. And we actually track this on our website and we show it. So if you go to strategy.com/STRC, the stretch tab, you'll see the last metric on the bottom left corner over there is the 1 month average price, a volume weighted average price, VWAP. And you can actually look at the metric and you can get a fairly good understanding of what strategy will say or do at the end of the month because we're extremely transparent about it and we want to be transparent about it. We don't want there to be any unpredictability about what we're doing because then that breaks the trust down with investors. And perhaps your follow up question would be then how far are you willing to take it up? And the answer over there is if we believe Bitcoin is appreciating 30%, then as long as we are materially below that 30% and getting to capture a large part of that spread, then we're okay. And even if it's going up from 11%, 12% to 13, 14, 15, like it doesn't change the underlying sort of philosophy or business rationale, which is that Bitcoin is going up 30% and I'm getting to capture that spread. So yep, that's the way we'll operate. And we will do everything in our sort of power to keep it at that $100 price. And if that means increasing the dividend rate month on month, quarter on quarter, we'll do it. But practically speaking, we don't think it's going to be necessary. And you're seeing it this month or this week. Like Stretch is trading very, very well. Understanding and awareness is going up a lot more. There's a lot more retail demand, a lot more institutional demand, a lot more demand from corporates as well. Different corporates announced that they're adding Stretch as a treasury asset to their balance sheet. I don't know if you caught any of this news last week from our conference in Vegas, but we can dive into that as well. But that's the broad framework over here.
Yeah, it's so interesting to see. Um, yeah, just the amount of people, like if you're in Bitcoin and like really like keeping on it, like how many people are talking about this product or this offering? I don't know what you want to call it, but how? So a few questions that have come up, and um, I've heard a lot of people talking about like stablecoin yield and everything like this, and you can get like 6%, 8%. But then in my head, I'm like, but stretch, you can get 11.5. So why would I do that? So do you see this as like competition against those stable coins that are potentially not backed by Bitcoin? Um, do you see it as competition to those offering yield?
It's not necessarily competition, but you can definitely make a good case that a lot of demand that's going into stablecoins offering zero yield could, in theory, get diverted into Stretch itself or other instruments that are launched by other people that are then in turn backed by Stretch that are even more stable than Stretches and perfectly at $1 or $100 and are still passing through some of the yield, not the entire 11.5%, but maybe 7 to 8%. A perfectly stable instrument with a 7 to 8% yield. And then that becomes something that can compete with the stable coins a lot more directly. But it is interesting to see, the entire debate in the US today with the Clarity Act is that the banks don't want the stable coins to pay yield because then that takes capital away from checking and savings accounts in the banks and causes a bank run and then kind of, causes stress in the banking industry. And banks themselves want to tokenize their deposits. They want to tokenize it in effect like a checking or savings account and have that be on crypto rails. And this debate is around banks offering 3 to 4% on tokenized deposits or 2%. I don't know how much. Stable coins offering nothing. But on the side is something that people are not paying that much attention to, which is Stretch, which is, stable paying 11.5%. So yes, I think a lot of capital can get diverted away from stable coins and the likes into Stretch or products backed by Stretch.
Okay. Yeah, that's very like it feels like, and I dug up one of your tweets, and it was MSTR inspired 200 companies to follow in 5 years. Stretch will do the same. It feels like strategy have been looking for that one thing that you can really focus on, that the market just accepts. Do you think stretch is that thing?
For sure. I think Michael also, frames it as the iPhone moment for strategy. The one killer product built on top of Bitcoin is Stretch because so many people have done so much with Bitcoin over the last 10 to 15 years. And a lot of it is extremely useful and extremely valuable and has pushed the industry forward. But our view is that the killer product using Bitcoin is something that's dollar denominated because the entire world runs in dollars. The unit of account is dollars. Everything is pegged in dollars. So it has to be dollar denominated and it has to be something that's stable, that is stripping away this volatility of Bitcoin that creates so much fear and anxiety for so many people. So it has to be stable and it has to offer some yield on that product. And if you can create something that's dollar denominated, stable in value, and offers high yield, and that's backed by Bitcoin, and that allows you to accumulate more Bitcoin and benefit another set of investors, then that becomes like the killer application. And the STRC investors are benefiting because they want something like this, stable value in dollars with yield. And the MSTR investors are benefiting because they're just Bitcoin maxis that want to take some risk and try to outperform Bitcoin by trusting strategy, trusting the management team, and trusting this business model. So MSTR benefits and STRC benefits. And this is like the killer application. And as I said, 200 companies, copied the treasury model over 5 years. And a lot of them will copy the STRC model as well, because they'll all see that this is something that has really high demand in every jurisdiction, everywhere in the world. People want something that's stable in their local currency, that is giving them something better than their bank account or checking account or money market funds. You don't want to pick up 1 or 2, 3%. when inflation in your country is 5, 7, 10%. You want something that outperforms that. And this kind of suck in a lot of capital into it. And then that in turn sucks in a lot of capital into Bitcoin. So it's almost like, 5 years ago, corporates adopting Bitcoin was like this inflection point in a new wave of demand coming into Bitcoin and a new wave of adoption. And I think these credit instruments will now mark that new wave of adoption. Like there'll be so many new investors that buy STRC first before they ever understand and buy Bitcoin or buy any other crypto token or buy any other sort of thing in the crypto world. They'll buy Stretch because it's stepping down the risk of Bitcoin. Everything else in the world, in the crypto world or Bitcoin world, was always stepping up the risk of Bitcoin. It was always riskier than Bitcoin. And Stretch, in some sense, is less risky than Bitcoin because it's backed by a lot more Bitcoin on the balance sheet of strategy. So yeah, I think it's incredible. 6 months old, but it has a lot of potential.
So it is based on, as you were talking about there, like the management of or the trust that the brand has built and the treasury that the company has built as well. So for someone to replicate this, how do you see that happening? Because, well, we've already seen Metaplanet moving that way. Do you think it's predominantly will be those Bitcoin treasury companies that manage to accumulate a large amount of Bitcoin to then gain that trust? Yeah, and is there any other players that could come in and build something like this? But it might be quite hard not having that treasury.
Yeah, I think so. I think, as you pointed out, Metaplanet has launched these preferreds. Strive has launched SETA, which is pretty much identical to Stretch with some differences. And that's the key over there, that the treasury company needs to have a large enough size in terms of their Bitcoin treasury and their equity base to be able to create these sort of credit instruments, because you need to do an IPO, you need to launch them into the traditional capital markets, you need a bank to underwrite that deal, you need investors on the other side to want to buy it. So they will look at your track record, they will look at your size, the size of the IPO itself needs to be large enough to attract buyers. There needs to be a liquid market in your stock, which is the common stock. Then that will in turn give confidence to investors that you can back this credit instrument, and you can fund the dividends by issuing more incremental stock to pay the dividends on the credit. So long story short, the threshold or the barrier to entry is the size. And after you've reached a certain size, then you can look into this form of financing and issue these variable rate preferred instruments like Stretch. And if not, if you are at a smaller size, I still think there's a very interesting model possible over there, which is you actually take Stretch on your balance sheet as a Bitcoin treasury company and you collect 11.5% as the company. And then you in turn go and launch another credit instrument in your local country. Let's say it could be the UK, it could be Brazil, it could be India. And then in India, I offer, let's say, 8% Indian rupee dividends. And I'm just backing that with Stretch on my balance sheet. So there are these different unique things you can do. Instead of just replicating Stretch 1:1 on your balance sheet, you can just take Stretch and create unique products on top of Stretch. Because Stretch has definitely already proven itself in the market. It's become really big. There's $100 million of daily traded volume in Stretch today. It's going to go up from 100 to 500 to $1 billion of daily traded volume. And there'll be a lot of interesting ways others can benefit from that liquidity and create products that are backed by Stretch. And I think we might see that instead of everyone just copying Stretch, they actually start integrating Stretch over the next 3 to 5 years.
That's very interesting. Yeah, like integrating Stretch. I'd not thought about this. This is where, like, it's just mind blowing, like how fast things are moving in the space. So you think that potentially, let's say, treasury companies around the world, some who maybe don't think that they could pull off a product or something like this, that they could just use Stretch to then build a product using that.
Yeah. And It doesn't necessarily need to be something that's on the balance sheet. It could also be like a new operating line. Like it could be an ETF product that's managed by the company that is doing the sort of financial engineering. So I think a lot of Bitcoin treasury companies will find that very attractive. It'll be like a new operating line or operating business that they're able to start, and they collect their fee, and they grow a fee based model, and that in turn grows their Bitcoin treasury stack. And then as they become larger and larger, there'll be a thousand other interesting ways to sort of use your Bitcoin stack to do other interesting things. And this is just one of them. But this is one proven thing that you can do. In the UK, for example, you know, how much does a checking or savings account pay you? I imagine it's like nothing.
Yeah, near nothing. You'll get a couple of percent if you're lucky.
So now imagine you have a really innovative bank in the UK that has, you know, an existing relationship with regulators, that has a long track record, that people trust a lot, but is also willing to accept that Bitcoin is part of this future in the financial world, understands and trusts strategy. And then they take stretch and they actually put it in a regulated bank account. And a regulated bank account now pays you 6% or 7% in the UK, and it's backed by Stretch. Now, obviously, it has a very different underlying risk, and the characteristics of that risk is going to be very, very different. And maybe it's not, insured by the central bank in the UK, and these different protections that different bank accounts have are not there, but it's still coming in some sort of regulated wrapper issued by a trusted party. And then that is being backed by Stretch. So it doesn't need to just be treasury companies doing it. It'll be basically every other financial company over there, every other bank. And we are having a lot of these conversations in the US and globally with different banks, different ETF issuers, different fund managers. A lot of crypto companies are doing it as well. And they're just taking Stretch and creating like different products that suit their audience in their world and help them benefit from Stretch and Bitcoin.
This has really got me going because obviously we at the Bitcoin Collective now we've got the Bitcoin Business Network, which is closing in on 100 members, and businesses of all sizes around the UK, all stacking Bitcoin. They're mostly private. We've got a few public in there as well, but it's really interesting for them as well, private businesses, I imagine, because a lot of them sit on short-term cash that they might
Exactly.
need. Um, and whatever they don't need, they sweep into Bitcoin. But that short-term cash, they earn peanuts on it. If they, or they have to lock it up for 60, 90, 120, 180 days, if they want any interest on it. So something like this is very appealing to many private businesses as well, surely.
Yeah, exactly. And so in Vegas last week, we had three businesses, two private and one public, announce that they've added Stretch to the balance sheet. And one was Prevalon Energy, a private energy company in the US that put a reasonable size into Stretch. One was Anchorage Digital, which is, more native crypto. And one was Orange BTC, which is the Bitcoin treasury company in Brazil. And they've all announced that they've put Bitcoin into their balance sheet because, as you're saying, every business out there, private, public, in the US, in the UK, anywhere in the world, has some requirement of working capital, cash that they need in 3 months or 6 months or 12 months to meet payroll, to meet taxes, to pay their vendors. And do you want to keep them in short dated government bonds that pay nothing? Or do you want to trust Bitcoin, trust strategy, and trust this model and put it here and get 11.5%? And I think we're going to see a lot of corporations do that. And hopefully, through your organization and network as well, you can, help educate and grow awareness. And I'm curious, even for your organization or network itself, you might have a balance sheet, you might have a treasury. If you are, collecting any fees, keeping some cash, paying expenses to other vendors, and where are you parking that cash? If you only need it a month from now or 2 months from now, Stretch might be a reasonable alternative.
I think it is. It's really got me thinking about all of this, and yeah, yeah, there's just so much possible with it, which is the beauty of it. Because I'd only really been thinking about it on like an individual level, because I'd only really heard individuals really talking about it and them putting it in, um, like we have tax wrappers here, if it's like a pension, a SIP it's called, or stocks and shares ISA. Um, but it's a bit of a game changer for businesses to be
Exactly.
able to have this.
So our annual conference that we did in Vegas last week, it's called Bitcoin for Corporations. And for 5 years, we kept advocating for corporations to add Bitcoin to their balance sheet. And I mentioned earlier, right, that was a large part of the advocacy work I was doing with Michael and the team. And we didn't have that much success. 200 companies is a good outcome, but so many other companies with so much cash on the balance sheet just cannot take the Bitcoin risk. They cannot wait 5 years for it to pay off. They cannot stomach the volatility. They cannot convince their board of directors. They cannot convince their investors. So just Bitcoin is just not looked at as a very suitable treasury asset for a corporation. So now what we're saying is Bitcoin for corporations is stretch. Like if you want to benefit from Bitcoin and the price appreciation in Bitcoin, but you can't stomach the risk, you can't stomach the volatility, then just you could, in theory, look at Stretch as an interesting instrument. And we at Strategy and MSTR shareholders absorb all that risk, absorb all that volatility, and you just get pure yield. You just get 11.5% being paid monthly in cash, and all that excess risk is just being absorbed by us. And here now you can benefit from Bitcoin and benefit from it even if you just need the cash in 3 months or 6 months or 12 months. So that's the beauty of the model. And that's why, this is that killer app, which, I am very optimistic and very bullish. And its Stretch is currently $3 billion, $3.5 billion in size, trading $100 million per day. I wouldn't be surprised if, we go into a raging bull market in 1 to 2 years, Bitcoin's at 200K, 300K. People are understanding Bitcoin a lot more. People are understanding Stretch a lot more. Strategy has built a longer track record. Stretch has been in the market for 2 years, and we can easily go from 3 billion to 10 billion to $30 billion. And all of that capital will just go into Bitcoin and drive Bitcoin's price further up, which then makes MSTR look more attractive and gets more demand into MSTR, which then feeds into Stretch looking more attractive and then gets more demand into Stretch. And then it just becomes like a very positive, reinforcing flywheel. And it's all just good for every Bitcoin investor out there because all of it is just pushing Bitcoin's price up for everyone.
So I'm so glad we've done this episode around this. It's I think this will be so helpful. It's been helpful for me, but I know a lot of the listeners as well. Like just the way that you've explained it as well has been hugely beneficial. So yeah, thank you so much for coming on and yeah, taking the time to actually go through this. Is there anything that I missed around Stretch or anything else?
I think we covered it all. I think, for your listeners, as they want to learn more about Stretch, read more about Stretch, I think there's interesting and fascinating analysis that a lot of folks are doing on Twitter or X. And there's a lot of very good discourse, very good, thorough research that people are doing. And they're coming up with even better and simpler ways of explaining it compared to me. So I would encourage them to, scroll through their Twitter feeds and search for Stretch related discourse. And check out our website, strategy.com. It's a beautiful dashboard, real time, transparent information on our entire sort of capital structure and Bitcoin stack, updates every 15 seconds. There's a Stretch tab on there. So you can go and, view all the dashboards and data over there, understand more about Stretch. Michael and Fong do a lot of different interviews, podcasts all the time. So check those out to learn more. And yeah, I think we covered most of it. I would love to be back on as a follow-up conversation sometime in the near future when you and your listeners have more questions, and when your Bitcoin network has helped another 10 private companies or public companies build better treasuries. I think it'll make for a fascinating follow-up.
Yeah, no, I definitely would love to do that. Um, yeah, it'd be amazing. Like once we, because there'll be such alignment as well. Because we're in the business of helping businesses, small to medium size, understand Bitcoin, understand why businesses put Bitcoin on their balance sheet, and strategy has been such a good example of that. And it's the trends growing here in the UK, I think, just because of the landscape. So a lot more businesses are turning to look at Bitcoin. So yeah, we're seeing crazy growth, which is amazing. So yeah, who knows where we'll both be in a couple of months. So I think it'll be definitely time for another podcast. So
Yeah.
yeah, thank you so much.
Yeah, I wish you the best with the initiative. I know you launched it fairly recently, a few months ago, and it's exciting to see that you have so much momentum and so many businesses interested. So, I wish you the best with that. And yeah, thank you so much for having me on. I love talking about Bitcoin. I love talking about strategy and stretch. So I can do this for hours and hours. So I look forward to your request for a follow up sometime soon, hopefully.
Awesome. Well, yeah, thank you for coming on.
Thank you, Jordan. Have a nice one.
You too.